Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, 21,900 is here. We are just about less than 100 points away from that 22,000 mark that we have been speaking about since 2023, December 2023, right? And of course, today was a high-tech rally, given the fact that it was led by the tech pack, you know, the likes of Infosys. 8% kind of gains coming in on Infosys, right, Yatin? Given the fact that it has a high weightage on the index compared to TCS, right? You know, if you look at the Infy weight on the index, you know, it has 5.8% weightage on the index as of December, vis-a-vis TCS is 4%. And yesterday also, when we were talking about Infosys, I said if there was a positive surprise, we could see the stock fire up, and this is what has happened because, you know, the rally really started yesterday before the results when we saw a very sharp uptick in the last few minutes of trade, right? But aside of that, Yatin, aside of the Nifty IT pack, we had the PSU banking pack as well. That index gained somewhere around 3%. Mid and small cap indices were underperforming the benchmarks today. Autos and pharma, you know, these two sectors were sitting out of this rally. They were among the losers. On the Nifty, you know, aside of Infosys, all the other tech majors were fired up. So you had Tech Mahindra, ONGC, TCS, of course, after good set of numbers, Wipro, HCL Tech, you know, these numbers will be coming out, Wipro and HCL Tech post-market hours today. You know, other gainers include Tata Consumer, SBI, ICICI Bank and the likes, and Reliance Industries also, Yatin, continues to be on an upward trajectory. On the losing end, pharma names, Apollo Hospital, Cipla, some of the cement names, you know, Ultratech Cement, Power Grid, Coal India, these were some of the losers. But Yatin, from the broader end of the markets, any movers that caught your attention?
So clearly it was Midcap IT. Now, if you look at FSL, that stock moved 10% in trade, Infibeam, Oracle Financial, all of these stocks moving well. But what was also doing well apart from Midcap IT was the entire banking pack, especially the PSU stocks. We had the likes of Bank of India that moved 7%. In the NBFC space, IRFC, which is the Indian Railway Finance Corporation, that moved 6.5%. In the Midcap IT, you know, we had stocks like Cyient, Coforge moving by nearly 5.5–6%. So good moves coming in there. As far as profit take is concerned, a few stocks which were down in trade: Alok Industries, Network 18, Ease My Trip, Century Textiles, and remember, all of these stocks have rallied in the past 3–4 days. So some bit of profit taking in all of these names, but clearly we had a whole host of stocks like Lodha, Union Bank, HCL Technologies, Amber Enterprises, Glaxo, Motilal Oswal hitting fresh 52-week highs in trade today. So whole host of stocks which saw some good price and volume action in trade.
Right, of course, you know, entire breadth of the market also, you know, firmly in favor of gainers, and the texture of the market, you know, on the upside, of course, it's the IT pack that has reignited the bulls, so to say, and you know, who knows, next week we could be staring at 22,000 mark.
Absolutely.
But on that note, let's take a look at the stocks that are on our radar rather. I know it's you know, the third day in a row that I'm talking about IT stocks, but really this is one pocket that has been in focus for the greater part of the week. And Infosys, of course, you know, TCS reported better set of numbers. That's what analysts had told me yesterday, given the fact that margin beat has come in on the back of the BSNL deal for TCS. But Infosys, street was expecting, you know, something, you know, a little negative for Infosys, because it was the worst hit from the entire discretionary demand weakness, right? But dollar revenues have fallen, CC revenues have fallen, but the fall hasn't been as bad as the street was expecting, and that is something that has given confidence. Also the fact that, you know, the deal wins that have been announced, $3.3 billion, are fresh and large deals. So that has revived sentiment, so to say, because the deal momentum remains strong. And from the management commentary also, they have tweaked the guidance, but management has said that, you know, has indicated that this could be the bottom in terms of revenue. So that is something that the street took heart from. So brokerages have of course been positive. You know, if you look at Jefferies, it has a buy rating, target price of 1740 rupees per share. It has raised its earnings estimates by 2% on the stock. It has also said that it expects 13% EPS CAGR over FY24 to FY26. Nomura has a neutral target, mainly because a neutral rating, mainly because from the management commentary, there has been no indication as to whether you know, discretionary demand has improved or not. Management has maintained that there has been no change. So which is why they have maintained a neutral rating, target price of 1500 rupees per share. You know, if you look at HSBC, even that has a buy rating, target price of 1620 rupees per share. And Nuvama also has noted that Q3 has shown improvement after back-to-back disappointments. So they also have a target price which has been raised to 1850 rupees per share. So you know, tech stocks, clearly walking away with the cake in today's rally at least.
Correct, and so is the case with oil and gas stocks, which saw some good flare up today. In fact, Nandita, today the top Nifty gainer apart from IT stocks was ONGC, and this is on the back of a target increase by CLSA. Now the new target on ONGC is 240 rupees. So the oil and gas pack, CLSA has made a lot of changes. Now they have downgraded Petronet from outperformer to buy, but the rating is still buy. Target is 240. They have downgraded GSPL from buy to outperformer. Target is raised to 360. ONGC, as I mentioned, the target is raised to 240. And now, if you look at the oil and gas pack, CLSA believes that the city gas distribution players have a good advantage over traditional oil and gas companies. So they prefer IGL and MGL as their top city gas companies. In fact, they recently downgraded HPCL, BPCL after the run-up that we saw because they are uncomfortable on the valuation. But clearly, right now, ONGC is in a sweet spot. If you look at the oil production, the gas production from the KG Basin, they expect that the ramp-up will be quite good in the next financial years to come. And obviously, CLSA believes that the oil marketing companies are likely to normalize, and obviously the EV transition remains in focus when it comes to the oil and gas pack. But clearly, ONGC is the stock of the day, apart from the IT pack stocks, given the fact that on huge volumes, we saw some good price and volume action. And remember, it is one of the top Nifty weightages as well. So the contribution also of the Nifty move is more or less also because of the ONGC 6% move that we saw intraday.
Right, Yatin, what's not in a sweet spot is Demart. Numbers are expected tomorrow.
Yeah.
It came out with its business update 1 week ago. And it has earned mixed reviews from brokerages. Of course, what it has not been able to do is spruce up its non-FMCG business, and the street will be watching out for whether or not there is some bit of revival there or not. If you look at the estimates, profits are expected to grow 15.5% on a YY basis, and revenues are expected to grow somewhere around 17% on a YY basis, but is expected to remain below pre-COVID levels. And this is something that HSBC has noted, and it has also said in its report that there has been an improvement in throughput, and also the fact that the company has added 5 stores in the quarter gone by. HSBC has called it pedestrian, so to say. The company is targeting 40 new store launches in the in FY24, and so far it has opened somewhere around 17. So in the quarter gone by, revenues will be aided by 5 new store additions. Aside of that, as I mentioned, the non-FMCG business is something that the street will be watching out for. The company has not been able to spruce it up, because it's a high margin business when compared to the FMCG business, and it continues to underperform. That has been, a pain point for Demart, given the fact that it has underperformed. If you look at last year, the stock has underperformed clearly, and even ever since it came out with its Q3 update, the stock is down somewhere around 6% or thereabouts. Key to watch, gross and EBITDA margin trajectory. That is something that will be watched out for. And same source sales growth is expected to grow somewhere around 7% or thereabouts. So that's about Demart. The numbers will be coming out tomorrow, and of course, the stock will be reacting to it on Monday.
Absolutely, and the street was slightly disappointed with the quarterly update. Nandita, I hope their operating performance is slightly stable. If not, probably the stock could have a higher downside, given the fact that the valuation remains rich for a company like Demart.
That's true. Well, those were all the stocks on our radar this afternoon, but we are ending the week on a very good note, on a very celebratory note. It's a record close for the market, above 21,900. So take heart from that and have a great weekend, Yatin.
Absolutely.
You and to all our viewers as well. And come back because, of course, next week, once again, earnings will be taking center stage, given the fact that HDFC Bank will be reporting earnings, Demart tomorrow, and I think a few others like Paytm will also be reporting numbers next week. So on that note, thanks a lot for tuning in from me and Yatin. But you guys stay tuned to Moneycontrol for all your other news and updates.